Hey, what's up? This is your boy E White Dark Horse Investor. All right, so I'm on my FX book. We're looking at the sentiment report. I'm going to look at the US dollar, Canadian dollar. We up long. We have 93% long and we have 7% short. So our bias is that we're currently are in a downtrend. We're looking at a bearish setup and it's been playing out beautifully. All right, so let's go over here. Let's look. All right, so we already got our areas. We had this massive drop off since yesterday. Where is Friday? Since Friday, and then Sunday we was moving sideways, and then we finally dropped for 81 pips to go ahead and solidify our bias. Remember, liquidity is the name of the game, which means is that we we provide liquidity for bigger players in the market. And so if 95%, what is it? 90, what was it? 93%, if 90%, 3% are long, we know that they're providing liquidity for someone who wants to sell. So now we have enough people at the table to sell to, and this is becoming a seller's market. So why is this a seller's market? All right, look, even though the price is dropping, something is setting up for something else, right? Everything about the market is manipulation. Even it doesn't. When I say that everything about the market, I'm talking about every market on the planet for the most part. Your advertising, all those things, they're done in a manner to trick you or coerce you into doing something that they want you to do. As simple as that. So don't think that you're special and that can't happen. It happens to us all the time, guys. That's why the news is so powerful. But anyway, if you look at this chart, something is setting up. Perhaps the bigger players actually want to buy, but they don't. They refuse to buy up here. They refuse to buy here. They want to buy anywhere from here and maybe even lower, right? So we got to understand something is setting up to where they can get a discount for buying purposes. Now we do know that the economy is a little shaky, and that means that the dollar probably will continue to get strong over time. Yes, we have these relief rallies for the most part, but that doesn't mean that it's going to be sustainable. Right? And so we look back at these charts, the USD pairs, we can see a lot of opportunity where there could be some form of rallying on its way. All right, so if you take a look at this pattern that's set up too, all right, or this structure area right here. All right, look at this. Okay, you see this? Look at this. Sort of similar, right? All right, now watch this. You know the beauty about trading is that you don't always have to be right. But what you need to do is you need to be able to repeatedly over and over pull the trigger when you're trading. Simple as that. With conviction. Just, hey, if you see your setup, take your setup. It don't matter if you lost the last three in a row. You still take your setup. You run your system. It's the name of the game. Simple as that. Okay. So could this pattern shape up and we boom rally? Possibly. But this is what I do know is that we are back in a demand zone. Okay. And let's do this. Let's go to a bigger screen for you guys. What was the last candle before we moved out of the zone? I guess this is right here. And this is where we are. Some people already look to enter in, and this is not financial advice. I don't trade like that to enter in right at the bat. But some people look for a retest to come back into the zone before they even take the trade. But all of you that's looking at it, you all that's enough videos online to look for entries. You can just Google that. You can look on YouTube for different entries in supply and demand zones. So there's no reason to even go over that. Now, once again, what if this fails? So what? If Michael Jordan or Kobe taught you how to shoot the ball and you missed, are you gonna go back to Kobe and Jordan and say, "Hey, it didn't work"? You think Kobe and Jordan hit every shot? No. All right. Keeping it simple and understanding supply and demand zones will work wonders. I was going to do a video just mapping out certain levels and how we will continue to retest them, but decided to go against that because that you guys already know that. You already know that. You already should know how to come on here, mark out specific zones or support resistance areas, and you understand that hey, if support is broken, it becomes a new resistance. Look, it was broken. All right, came back up, retested, what came back above and then back down, retest, drop. This pattern plays out all the time, right? Uh, we're here. Most people will just go ahead and just jump in, but guess what? We got this area to play with. We got. I mean, do we break above it? No, and we clearly have this. So we got 12 minutes and 55 seconds left on the hourly chart. We got to see what's going on. Is this a time to just jump in? No, but somebody look at this and say this is a pin bar. If you're a pin bar trader, you possibly could have just now you want to enter based off of that. It's 1,000 ways people can trade this and do whatever, but you have to be conscious of why you're trading, where it's going, should you get out, and what are you looking for. As simple as that, right? We don't need to make trading more difficult. But sentiment is one of the things that I think is very beautiful when it comes. All right, look at the Euro USD. We got 70% of the short and 30% long. And if you notice these, even though the sentiment is skewed right now, what people don't realize is that oftentimes the retail investor is actually correct. They're just early. We're smart guys. We're smart. We know things. We see things. We speak on it, but we just don't have the power to move things. So therefore, it's not about what we think. It's about who has the power to move things, and the market makers have the power to move the market. So even though we go back here and we look and we see that the Euro USD is 70% short and 30% long, okay, well probably the 70% is right. It's just not right now. And no, you're going to provide something for someone who can move the market. So if you're willing, if 70% selling, then that means that I have liquidity, and that's someone that can uh, I could buy from. And so if I'm a bigger player, all right, so then I'm buying. What happens? If I'm buying, that means that I get to sell at a higher price because then that's going to switch. All right. You as a retail investor right now, you're 70%, but in the future, you're going to switch and flip flop, and you're going to become the 70% long, and they're going to become the 30% short. And that's how they make their money. So if like I said, if you're short on something, that means you're selling it, and that means I can buy it. And for the last, you know, this is Friday. These are Friday here. So Sunday right here. Where we at right there? Of course, it's just a measly little 39 pips, but we're clearly in an uptrend, right? And we're gonna see how this level can hold. And right now, if I was looking at the trade this stuff, we're not doing anything until this bracket could be, violated. So if we could break, we go. We got a little bit of clean traffic to get back up here, but you got to respect these levels, okay? And the most for you, you know how I trade. I love to trade the fibs levels. I see a beautiful fib setup that happened already. All right, we get what here? We cross the 23%. That's our signal that we got a high probability that we come down to the 61 through the 78, and that's exactly what happened. So that's the strategy that mainly that I use. I use that in the double tops, double bottoms for the most part. So guys, just stick with, like I said, one or two strategies. Look for that setup over and over. Work on your mindset. Continue to practice. Once again, if the baddest man on the planet, which is Michael Jordan in basketball, could actually teach you, you cannot get frustrated because you don't miss 10 shots. I mean, it's been times in Michael Jordan's career when he was 0 for 5 opening the game, missing all his shots. But he just kept playing. Just kept playing. Some games he would have a bad game. In fact, let's look and see what was his worst points ever. All right. So in his career, I mean, if you think about this, um, he played 13 games with fewer than 10 points in his career. But here's the key: majority of this came after he had retired and came back and played for the Washington Wizards at the time. And of course, this is just the first time. Um, when back in the early '80s, in his younger days, he had 8 points. Like I said, in 2001, this is the tail end of his career. 6.979. And, you see all these low points, whatever. These are the minutes that he played 25, 30, 16, whatever. He look, this man played 40 minutes and he had 2 points. But that's mastery, though. You know what I'm saying? Like, he probably still affected the game, but didn't even have to take shots. It wasn't even about him trying to be the main scorer. It's about him being a leader, and it's about him getting the young guys involved. So that's very powerful. But coming back to trading, like I said, Kobe leads with the most missed shots. All right, uh, but he's still one of the most iconic. If we go down in history, as one of the top players in the NBA. So just because you're taking shots and you're missing doesn't mean that you're a failure. Doesn't mean that you don't know what you're doing. You're playing. You're part of the game. As you get older, you will start making wise decisions. You can take less shots and be more effective. And that is basically taking your setup, not trying anything new. Take your setup, your shot. It's your boy E White. I'm out. Hit the like button, subscribe. See y'all in the next one.